morning, everybody. How's everybody doing out there? Welcome to Crypto Trades and Tech. Let's surf our way to a van by the river. How's it going, everybody? So today we're going to be talking a little bit about where Bitcoin's price action is, and start to look at a little bit of exiting the top, what my thoughts are around exiting the top, and lining up alt season 2. So we got some exciting breakout here of this potential bull flag this morning, but it still hasn't really broken out like I think a lot of us hope for. What was people calling it? Is it Moonvember? So it was Uptober and Moonvember? I don't know, whatever the catchy crypto Twitter phrases. All right, everybody. Well, but before we get rolling, just to make sure everybody is aware that I'm not a licensed financial advisor, so anything that you hear here is just my opinion about what I see in the markets. If you were to take trades blindly based on anything that I say here today, you're going to be losing all of your money and living in a van by the river. But like I said, let's try to catch some market waves and surf our way to that van by the river. All right, take a look at comments. Good morning. Good morning, everybody. Can you talk about DOT first? I can. So DOT is my Polkadot is my preferred play in the multi-chain space. So you've got the big players in the multi-chain space are Cosmos, which kind of started, really it was the first major project that had a multi-chain kind of capability. And then Polkadot came along with Gavin Wood, who's the founder. He was technically a co-founder of Ethereum, wrote a lot of white papers for Ethereum. Very smart guy, PhD, yada yada. And then you have now Avalanche that's come along, and Avalanche really uses a hash-based graph that runs over the top that can be used to either do a hash-based decentralized ledger, or it can be used to orchestrate multiple blockchains, and they have the concept of subnetting. But anyway, Polkadot's more of a traditional blockchain. It's a sharded infrastructure, so it's got 128 what's called parachains, which are individual shards of a master ledger that's run by the Polkadot network. And so you could have 128 projects that are built on top of Polkadot that do interesting things they're highly interconnected and secured by the main Polkadot network. The really interesting parts are, A, they're going to be highly connected to everything else in the world, and B, they're highly secure, right? So this kind of multi-chain concept gives you this like one Uber chain that's highly secure. So that's really cool. It is my preferred play in that space just because I'm not comfortable with, at this stage, hash-based, those directed ASIC graph DAG based, I should say, ledgers like Avalanche. I think it's a cool project, but Polkadot is my preferred play. So looking at Polkadot's chart, guess what? It's in price discovery. Woohoo! I got to put a rocket on it. I don't know. There's not a lot of analysis to do on it. Up, number go up. I don't really know what else to say about Polkadot. It's going up, and not unexpected. Now. Let's make this pink. Can I make this pink? The color is pink, so I kind of respect their little polka dot. All right. The big thing about Polkadot and the number go up on Polkadot is it is Bitcoin season, in my opinion. So this is great. You're gonna have individual projects that pump. I should have taken a trade on it, but I consider this coming into resistance. So I'm watching closely as far as trades go. I haven't taken a trade on it. Let's go to the flip of the 12-hour here. We're starting to print that first test wick. Let's see if we got a 4-hour. Yeah, see, we were consolidating under resistance and blasted through. Had I been awake for this, I might have thought about putting on something as we took out that wick. But at this point, I'll wait for the next entry. I'll be watching the 12-hour on this one. I don't know. You could watch the 4-hour this one for sure because it's now a trending. So I do take trades on when crypto is trending. I will take. This is probably going to form a little bit of a bull flag and take off. I will take 4-hour trades on trending assets. All right, what I'm really watching is this chart more than this chart. Let's see here, Polkadot. There. Let's make that pink too. All right, .BTC. So if I zoom out a little bit on this chart, flip to auto here, you can see, yep, nice little breakout of this downtrend structure. You know, it tried to pop out here, came back a little bit. It's found some support back over here. You see this high right here, kind of put on a low. These two highs over here. It found support at this area, and then it took back off. This, if you were really wanting to add to your position, that would have been a good opportunity to add, obviously. Now we're back above this, broke out here, and then if you look at it on a horizontal basis, you're probably looking at a daily level. Yeah, that's why I have that white line right there. That's the daily level. That's the exact level I'm watching for an entry. So breakout, retest, looking for that resumption here a little bit. You can also take, what I've been kind of preferring to do, honestly, is I'm preferring to take, instead of breakout, retest, resumption, I'm waiting for a close on an hourly basis, and then it come back into support, and then like maybe a third entry on a resumption. The resumptions, though, in crypto, as I've dialed in my own strategy, I'll just share this with you guys. I've stopped taking so many breakout, retest, resumptions, because by the time you get this resumption, you've already, there's a lot of price action. A lot of times in crypto, it can move a whole lot. So what I do is instead I wait for a 4-hour close above resistance. And then really what I do is I wait for it to come back into support. I prefer that, and buy them back into support and then the resumption off. But that's a good spot if you're looking at, so for me, I'd be buying Polkadot with Bitcoin, right? So I want to make sure that it's moving in the right direction on the Bitcoin chart. Because if it's moving, like if it's breaking out on the USD chart, but it's losing ground to Bitcoin because Bitcoin's breaking out harder, then that's not a situation I really want to be in. My music's still going. So those are my thoughts on Polkadot. Very good project, obviously. Like I said, founded by Gavin Wood, very good team. There's a lot of excitement right now because they're doing their parachain slot auctions. So I said, I think maybe early on, that the best opportunities some of the best opportunities in the coming alt season 2 market were going to be Polkadot parachain slot projects. So projects that got awarded a parachain slot. Now, at the time, I'll be honest with you, I had intended to track it a lot closer and buy projects that I thought were going to have a really good chance of getting a parachain slot. But given all this uncertainty around crypto through this whole summer, we were really distracted by trying to figure out what was going on with crypto and Bitcoin and making sure that we didn't have some kind of modified cycle, whatever. And so our timelines were pushed out, so a little bit longer than we all thought. And secondly, I'm just generally speaking, I like to buy post hype. So it's always been my preference to buy things after they get their initial round of hype, and after then you have this settling in, and then you have a general capitulation phase of people who kind of bought in the early top, and then buy that first capitulation phase after that early top once you see real adoption, but still be early to the play, but that's right after like post hype, the initial hype. So that's where I'm at on Polkadot parachain slot projects. That's where I'm at on things building on Cardano. That's where I'm at on things building on all the other projects we're watching. You guys know that I'm looking for a big move in Litecoin too. I don't think, this is just a small side note, I do not think that Litecoin is going to pump the same as the rest of the altcoins when the peak of altcoin season 2 comes. I think altcoin season 2 is going to be much more focused on things like gaming NFTs and DeFi, and Litecoin is going to pump as Bitcoin does, right? So Litecoin is going to shadow Bitcoin. So when it's Bitcoin season, that's when I start actively trading Litecoin, right? That's the thing, is I look at Litecoin as an accelerated play on Bitcoin, right? So a lot of times if you get a breakout in Bitcoin, but altcoins like Litecoin specifically just sitting here on this support line, what happens is after Bitcoin breaks out, you have the opportunity to buy a lagging Litecoin. And a lot of times Litecoin will then pop on the Bitcoin chart and make an even bigger move versus Bitcoin when Bitcoin first starts its consolidation after a big breakout. So I started trading Litecoin here because we made a new all-time high over here. And you see this consolidation over here. So this is exactly what I'm looking for to start trading Litecoin. I'm looking for some hype around Bitcoin to make a new impulse, new all-time high or a big move of some type, and then to consolidate. And what happens when Bitcoin does that is Litecoin likes to mirror that move, but kind of a little bit larger. So you can see that we started buying Litecoin when it was actually underneath this right here as it comes into this bottom trend line. And so it's been slowly moving up. So I wanted to clarify something on my Litecoin position. This is not a long-term position. This is a play for the month of November. And the month of December, when I expect Bitcoin to be especially strong. Now, another thing on the subject of Bitcoin being especially strong. All right, let me go back to comments here, and then we'll get back to looking at Bitcoin specifically. I did want to touch on a little bit. People have seen me post a lot of things about Litecoin. I want to be clear about what my intentions are with Litecoin. Good morning from the Northeast. Good morning. Good morning. Seems like the van got an upgrade. Yeah, I mean, our van keeps getting nicer and nicer, doesn't it? I don't know. We might have like a RV by the river in a nice spot before too long. Good morning. Large Rocket is back. Yeah. If you haven't touched on it already, why do people seem to hate ADA all of a sudden? Joshua, it's that post-hype sleep thing that I talked about. So what we want to do is we want to buy pre-hype and post-hype. So we bought Cardano over here, right, ahead of the original Mary's hard fork, which brought... So you could have bought Cardano way over here before staking was introduced by Byron. And then you could have bought it over here ahead of the Mary's hard fork, which brought multi-asset. And then the Alonzo hard fork. So basically all of these events, this was basically... this was Mary's hard fork right here. This was Alt Season 1. And this was Alonzo hard fork. So you want to buy ahead of this hype leading up into these big events. And then you want to chill, take some profit. And then... Here, I don't know if we end up taking profit around the Mary's hard fork because I was waiting for Alonzo. Yeah, I took profit on Alt Season 1. But the Alonzo hard fork was the big one. Everybody been waiting years and years and years for it. So Mary's hard fork was really just a step in along the path of getting to this big smart contracts rollout. Because Cardano is fundamentally different with its extended UTXO model as opposed to an accounting model. So Ethereum and many other chains that mimic Ethereum as closely as possible, Outrun being a good example of one, use the accounting model. Now, the accounting model is more expedient and a little bit easier to work with. It's a little bit more human understandable. But the UTXO model is what Bitcoin uses, the unspent transaction outputs. And it's considered by researchers anyway, especially the Cardano IOHK research team, that UTXO model, unspent transaction output, UTXO, is considered more secure mathematically than the accounting model. Okay, especially in code, right? So when you're writing code, this is a little bit more provably secure. You can do code validation against this, and you get a lot more higher probability outcome that it's secure code. Okay, so but Ethereum and the others use the accounting model. Which is also, there's a lot of really good work around building provably secure code around that as well. So it's not like it's not secure. It's just UTXO, the IOHK team felt was more secure. So what they wanted to do is they wanted to build on those principles that Bitcoin had, and they extended the UTXO model, the eUTXO. So their Cardano's extended UTXO model is very drastically different than the accounting model. And if you think about it, while Bitcoin has been around for a long time, nobody's really used the Bitcoin base layer to build smart contracts on, or not in a significant way. There are projects now that build on top of it that enable smart contracts. The two big ones are going to be Sovereign, SOV, and the other one is not a project per se. It's just data log contracts, DLCs. And especially when you pair Taproot with its multi-signature, Schnorr multi-signatures, right? When we pair Taproot with these data log contracts, this is an external oracle. This is an external data source that's fed into this log contract that can then be used to write UTXO values back to the Bitcoin base ledger. This allows smart contracts. And then a second layer, like Sovereign, technically can allow smart contracts. Okay. Now, Sovereign is much more about a decentralized exchange at this point, but there are other projects that are also working on building smart contracts. But it's really its own independent layer. In the case of Sovereign, this is merge mined with Bitcoin. So they use the base Bitcoin security. Anyway, all that said, Bitcoin has not ever really been used for smart contracts. So this is not like what's significantly used. This is like less than 1% of the whole smart contract market is using something on Bitcoin. Everything else is Ethereum, right? And Ethereum uses that accounting model. And so the big problem people are having is that Cardano uses a extended version of the UTXO model that Bitcoin used. And as such, people are finding it difficult to understand. Coders are finding it hard. There's a couple of difficult problems that it creates in writing certain types of functionality. A big one, everybody talks about decentralized exchanges. The decentralized exchanges have a harder time figuring out how to work around some things. In the accounting model, you can write to multiple accounts at the same time in the same contract. Where in the UTXO model, you can only write for the execution of a smart contract, you can only write you can write more than one transaction to a wallet, but you have this locking situation where when you use certain types of transactions, you end up locking that wallet address until it's confirmed, and you can write again to it on the next after the next epoch. Okay, so that creates problems for them though, because in an exchange, you're trying to write values, potentially update the ledger multiple times on a single wallet address. And so really what it boils down to is what these decentralized exchanges are having to do is here's your wallet address, right? This is like mine or your actual wallet address on the exchange. They simply have to build a layer of abstraction. So that's ours. And then they build this layer of abstraction where they're actually using other wallet addresses to write to on the chain, and then they finalize that onto our wallet address. So you can have multiple transactions on another layer. So there's different ways of working around this problem. That's one of the big problems that people started talking about with Cardano was, all right, decentralized exchanges are going to have a harder time being able to do certain types of very rapid transactions on a single wallet address. And so they're going to have to develop a solution to make sure that they don't have problems with that. Looks like Bitcoin is moving on the move here again. Good. Okay, so that's a big explanation on what's going on with a big explanation, but that's just off the top of my head, some stuff about their Cardano. What are your thoughts on potential Plutus application backend release this month? Charles on recent AMA said we're scheduled to release and schedule looks discounted. Yeah, I started watching Cardano closely again for a bottoming. Now on the technicals, Cardano, again, it's post-hype right now. Alonzo came out, got your hype event, and then it's been selling off post-hype. This is a great opportunity to look at starting to layer back into some Cardano. And remember, people know that I'm also buying Elrond right now. And Elrond is a good project. I love Elrond. I've always liked Elrond, actually. This is not a new thing, right? I've owned Elrond for... No, I bought a little bit of Elrond when I was buying a lot of stuff last year. But I don't know if it was Eagle back then or if it was the ERD token before they flipped it to Eagle. I think it was actually the ERD token. Nonetheless. But what I was doing is I basically rotated from Cardano at the Alonzo hard fork here over to Elrond because Elrond is working on... Let me just show you all this. Because this is just riding the waves and the hype. I flipped from that. You saw that peak. I flipped to a bottom. It happened to work out to where Elrond was bottoming out. Let's see here. What date was this? August? Let's see where Cardano was at the top over here. When was that? When was it that I sold? September. So I sold my Cardano over here as we were curling over in September. That was late August, early September. And I bought Elrond. Make sure I get this right. Late August, early September. Here we go. This dip right here. Sorry, this one over here. Up, back to this resistance, back to that support. This is where I started buying Elrond over here. I rotated funds because Elrond had the advantage of they're coming into their MyR decentralized exchange. They're launching a decentralized exchange that's internally built by the internal Elrond team. And so that's going to create a lot of hype for this project. And it's a good project. So I rotated funds there. Now, to your point, ADA is now post-hype. There's going to be projects that are announcing on it. There's going to be a lot of hype around it. They have some of the highest development activity in all of crypto space on Cardano, and it continues to be so. I still honestly believe that if any smart contract blockchain is going to overtake Ethereum's market cap, it will be Cardano and not Elrond, right? So the long term, in the next, maybe 6 months, I think Elrond's going to massively outgain Cardano. But in, say, 4 to 5 years, I don't know, it can still outgain Cardano because it has so much ground to make up if you look at the coin market cap. But, yeah, so see here, Cardano's way up here. Okay, we drop back to, well, Tether didn't count. So number 4, right behind Binance Smart Chain. Binance Smart Chain should not be ahead of Cardano, in my opinion. 66 billion. Solana is eventually going to disappear from this list. Or, yeah, it won't disappear, but it'll fall out of the top 10, I almost promise you. In the long run, like maybe 4 years from now. Let's see here. Where is Elrond at on this list? So it's got a lot of catching up to do. Where did I pass it? There it is. $5 billion market cap. So there's not any, like, Elrond is clearly superior to Tezos. It's superior to Solana for that matter. So there you go. So Elrond should be, right behind Cardano on this list, in my opinion. Maybe Polkadot. Polkadot probably deserves to be ahead of Elrond even. So in the long run, though, if anybody's going to take out Ethereum, it's going to be Cardano, in my opinion. And the reason, there's twofold reason for that. One, it's the team that they have, the development activity. And two, it's because it's drastically different, right? So Ethereum, when they go Ethereum 2.0, and with the whole scaling ecosystem, and obviously the network effect and the lead it has, you're going to have to do something drastically different to take it out. You can't just be a slightly better version of Ethereum. You have to be a drastically different version. And so Cardano, being with its, getting all the FUD around it, is its extended UTXO model, it's very different than the accounting model in Ethereum. If people start to use this more, and things like all the smart contracts that were launched on Ethereum, where they had like a flaw in the smart contract and hundreds of millions of dollars were stolen because the code wasn't right in a smart contract. That's happened many times on Ethereum, right? And there's all kinds of DeFi hacks and things. If because of the the more provably secure code and the work the Cardano team has put into building good security, robust security around coding, if that really becomes apparent, then that's when Cardano can actually really move on Ethereum. So this is why I do think, again, Cardano has the higher chance of eventually overtaking Ethereum, if anybody does. I would put the odds at like 10%, right? So I'm not saying it's going to happen. I'm saying it could happen. All right. Good morning. Oh, no problem. Live streams. So that's my. All right, Brent. Take care. How likely is LTC going to go to 10x? Are you as bullish as misconfig? I'm not as bullish as misconfig. I don't think it's going to 10x from here. This is what I'm looking at. All right, so on Litecoin, the prior all-time high was 400. We definitely could take that out, obviously, with Bitcoin doing what it's doing. We've dropped back a little bit on Bitcoin. Okay, good. It's printing another signal for me to add a little bit more here. I did sell. I'll be honest with you guys. I sold yesterday when it closed below the 20-day SMA. I had a full-size leverage position on. I sold 20% in slight profit yesterday, just in case the closing below the 20-day SMA was kind of a warning signal that we were going to head for another wipeout of leverage, which was starting to build. But after looking at it closer last night, I decided not to sell any more than 20% because the leverage isn't that high and there's just way too much support under it. It feels like it needs to move up another level before that leverage gets wiped out again. So I'm looking to put my 20% back on in the next entry signal. But I was just minding my downside. We did close below the 20-day SMA, so I thought I'd sell a little bit. And I'm looking for a nice entry signal back in that last 20%. Basically, I just bought myself some insurance. That's all I did. All right. But on Litecoin, yeah, I can see it doubling, 800 or something. But if we look at I don't know. On the topic of exiting a parabolic top, right? We talked. That's one of the things I want to talk about today. Is my strategy. I'm not working on all these fancy charts of Bitcoin and price fractals and models and everything else because I'm not a fan of using revisionist history to try to take trades in the market. I want my strategy to be dynamic and based on real-time price action. And so I have a strategy that I've developed over the course of this year to manage and deal with how do you stay in a parabolic trade, like on a crypto that's parabolic, because crypto just trades differently than other assets when it goes parabolic. It does a lot more frequently. There's other things that have gone parabolic, but not like crypto, right? And so I've developed kind of a system of dealing with that. So I've showed that before, how I exited the top of Cardano and Ethereum in the springtime. I'm simply going to use that exact same strategy to exit whatever top we get in Litecoin and Bitcoin and all my altcoins, right? But to answer your question about Litecoin, I know a lot of people, misconfig included, they're looking at this big break and they're looking at a big move. So I talked about this last time I was on. I saw a guy that had like some weird looking, like, okay, he drew some boxes. I don't know where he got this. I really don't know where he got his, like, so he drew these boxes and he thinks it's like, I see declining, right? So I see the pops getting smaller and smaller and smaller and smaller. This is now, yeah, it's compressing kind of, sort of, and so you can get a big move. But the way he had it drawn was like it was going to be a move equal to that or something, or bigger than, for some reason. I don't know why I thought it was going to be bigger than on this side. But he had this like insane, and that would have set Litecoin up for like I don't even know how big of a move that'd be. It's like a $20,000 Litecoin or something. I think we're probably going to get a breakout move that looks more like this on the Bitcoin chart, right? Where it breaks out real nice. But my strategy for trading any parabolic move is simply, really, it's rooted around fib extension levels, which I don't know how well it'll work for this particular chart. I'll have to go look at the fib extensions. Hold on. I'll do it actually right now. So this is not going to give me probably very good, but this is I'll draw a weekly fib extension level. So our last weekly impulse before we take off, I'm going to go back to a monthly. This is going to require a monthly fib extension level. All right, here's our last impulse. I'm going to use this one. That's the fan. I'm going to skip that one. Let's use this one right over here. So the last green monthly, green, and then the bottom of the red, we're going to take those numbers. Those are going to be anchors for our fib. Trend-based fib extension. Now we're in a downtrend, so this, in theory, hopefully we get another print on the other side of this as it breaks out, retests, resumes, and we get a weekly or monthly level. But I'm just gonna, for the sake of just showing how this is gonna work, I'm just gonna draw this on here, okay? So pretend this is accurate and we're in an uptrend. It's not. So this is the top I'd be looking at right here, for now, right? So that's where I'll start to take profit if we were if we were just to break out right now today. And you start to run on Litecoin. When we break the 0.01, roughly the 0.1 level, a little bit above 0.18 level, I will take some profit, right? And so that's pretty much what I'm looking at, right? A smaller pop than these other ones. See this big pop, a little bit smaller, a little bit smaller, a little bit smaller, and then another big move, a little bit smaller. It's still a monster move. That's a 3x versus Bitcoin, roughly. Yeah, 3x versus Bitcoin. So if Bitcoin makes a move to 100K or whatever it is, and say Bitcoin 2x's, and then on the heels of that, Litecoin 3x's versus Bitcoin, that's a 6x in Litecoin, right? So we're looking at this, we could 6x in Litecoin, which would put us at what, $1,200? So that would put us way up here at $1,200. Now let's see if that lines up with the USD chart. Yeah, so it could be a big monster move all the way to say $1,200. It sounds crazy, I know, but it's not as crazy as, well, just watch. It won't be as crazy when it happens. You'll be like, wow, okay. Now this does not line up, right? My last monthly fib extension level only gives me a price of $600 on this chart. Likely we're going to get another print that's going to give us some different values on our, so hopefully what we get is a print that looks more like this in the coming month or two. And it'll probably be a week. Let's go look at the weekly fib extension levels 1 week. So this one right here, like this would have been a good example of if we can get a kind of a breakout, retest, resumption. But let's say here's the last weekly impulse right here, from that bottom to that top to that bottom. All right, that impulse gives us a top of 975. But that's what I'm looking at. I'm looking at a quick, basically, I'm looking at a quick 2x versus Bitcoin. That's kind of the way I would say it. I mean, it's as simply as possible. The reason I'm trading it is because what I'm wanting to do is I'm wanting to ride this breakout and give me a 2x on my trade versus, say, Bitcoin, right? And I've got these trend lines here. So you see the fib extensions I have. So likely, because of the work I just did on the USD chart, I'll be watching a lower fib extension level on the BTC chart. Like maybe we come into this trend line I've got here and this fib extension level. And if we start to curl over, that's where I'll take my profits. Now, how do I deal with parabolic tops? All right, let's go find a parabolic top and show you how I deal with it. Let's just go look at ETH. It was an easy one. So this is how I exit. My exit strategy is very dynamic. I don't try to draw fractals or figure out what price did in the past and exit based on that, right? All I do is very simply this. Like, so here's Ethereum's parabolic weekly chart. So what I do is I take, when you break the prior all-time high, on the next retest out of that, I draw a parabolic trend line on that. So let's look at the daily. This might be easier to do it that way. All right, this is 2018. This was area. This is where I exited originally my Ethereum position that's now been rotated into Bitcoin. Okay, so we broke this right here. This is the prior all-time high. When you're in price discovery, all I do, very simple strategy. When you get that breakout, that retest, and that resumption, I take that retest and I draw me a parabolic trend line through that price action. That's it. And then when price takes off again, so this is my base parabolic trend line, right? My breakout trend line. You get below that, I know it's time to get out. Then almost always, you're gonna have a channel that forms on this. Like this one was a channel, right? So we started, and then you broke to the upside of the channel. So I have this base breakout, and then I have a upside breakout of this channel. So now we're in full-on parabolic mode, right? So perfect. So then what I do is I say, okay, from the breakout of that channel, we're gonna draw another even more parabolic trend line. So from, I think when we were working on this in live, I was in 4 hour, probably. I mean, I'll be down all the way on the 1 hour, 4 hour, getting these trend lines dialed in. Here you go. So you really dial this in now. Okay, we get this breakout of this upper trend line. Now we're really parabolic. Now if I zoom in a lot, it doesn't look as parabolic, but that was like super parabolic right on a daily time frame. So what I'll do is I draw this breakout right through here, and that tells me where to exit. So from this kind of price action down here, through this post parabolic breakout, and then there's my base kind of level to watch, right? More or less. You get the idea. And so what I do is I try to wait for it to break out and then retest and then resume down. When I see this resumption down, this is my signal to exit. Right there. So this is where I exited. 4K is where I exited Ethereum, right? And then it came back to bounce a little bit higher. I don't know. I did initially sell some over here. Now, the other thing I do is that fib extension level that also helps me out. So I'm going to go to the weekly level on the Ethereum. And we're going to do the exact same thing on Bitcoin when it's time. When it's time for to exit Bitcoin, this is what I'm going to do to exit Bitcoin as close to the top as I can get. It's going to be dynamic, not based on prior price actions, based on what's happening today. All right. So the last weekly impulse before this went bananas was, I believe we were working off of this one right here, possibly, but it's going to be pretty close. So the impulse up, the bottom of the red candle, the next. So we had, I must have been using a different, I was using a different one because I did get it came out the top of this. So there you go. So the bottom of this green, the top of that move, and the bottom here. There you go. That was the last impulse I was using. I might have started with this one. Yeah, that's what it was. So we did start with the bottom. So the move ultimately was from here up through here, the next couple of red weeklies, and then back down. That gave me my top price. This is where I initially sold, right there, 42.93, right? So just do that fib extension level. Now for a brief period of time. Now if you go zoom way out, I remember being on chat with lots of people when this little bit of price action happened right here. We popped out right here and we broke out to the upside. I was like, guys, I'm selling some Ethereum. There's no way. Oops. We went literally off the chart. This is super rare when I actually see this happen, when you go off of a weekly fib extension level. We literally went off the chart. I'm selling some. This is, I want to highlight this because for this couple of hours, right? So if you take all this away, this is what the chart looked like at that moment in time. At that particular moment in time, you zoom in a whole lot and you're very focused on the short-term price action. You're just seeing this thing ramp up. Oh, it's holding the trend line. This is why people have a hard time selling the top. When you look at this, you're like, well, it's just breaking out. Like it's just breaking out over here. It broke the prior all-time high over here. We're another price discovery breakout, right? people were saying all kinds of things like this time is different, this cycle's different, Ethereum's gonna overtake Bitcoin, whatever. They're saying all kinds of stuff, and this was a couple hours, but on Twitter was blowing up and Discord chats are blowing up with people saying, you know, it's never gonna come back down. It's always gonna keep going up forever and ever and ever. And then the sell-off started to happen. But I literally said, we are literally off the chart over here. I'm gonna sell some, like 10 or 20%. And then over here, when we broke down, there we go. We lost the trend line. We closed a 4 hour below the trend line. Okay. Now, I think I might have sold some right there. Okay, we closed the 4 hour below the trend line. Time to trim some. Come back into the trend line. Sell a little bit more because it's now finding that as resistance. And when it rolls over right here, you see that bottom wick on that 4 hour test right there? That was my signal to get like as much out as I was going to get. Like the trades I had on for the purpose of playing alt season 1, this was my, all right, I am now exiting my oversized Ethereum position, and pretty much, you know, I exited most of it, and that was it. That was the signal right there. Now, hopefully, the same thing worked out on Cardano. It worked out like this on Matic. Let me just show you Matic just for fun. Right. It works out on a lot of things. It works out pretty well. Now, Matic went off the dang chart. And Matic is where I started to figure out I can't use daily levels because the daily fib extension level, it just went way blasted, way off the chart. So this is where Matic is where I figured out, you know what, for these parabolic moves, I have to use like weekly or monthly levels. It might have been a monthly level I used from Matic. Yeah, I gave myself a bigger candle. This is not the chart. I wasn't using a Coinbase feed. I was using a feed that had some more data on here. But I must have used a weekly or a monthly. These smaller market cap assets, though, can move so much. So this is what the fib extension level would look like over here. You can see now this is not going to be very accurate because this is not nearly enough price to work with. So you would have sold way too early on Matic, on this particular one right here. So this is an example of, yeah, this didn't work out. But let me go find a better Matic feed. Hold on. We're just talking about, generally speaking, how to exit top, right? This is my strategy for exiting the top. I think, who's been trading Matic for a really long time? I guess Binance. I don't like calculated by trading view, so I'm trying to find like Bittrex. When it back in its Polygon. There you go. Yeah, so there was a better feed somewhere. I gotta find it. I just go to the Binance calculated by trading view feed. There you go. 1 week, 1 month. Oh yeah, that wouldn't have worked at all. What did I figure out on Matic then? Because none of this would have worked. That was just like your fib extension level. It might have been after we broke out. It might have been a weekly after we broke out. It had to be this over here somewhere. It had to be that I drew a fib extension from this down here up to this top. It's got to be what it is. I found something eventually that worked pretty well. Yeah, there it is. And then the bottom of those. That's what it was. Okay. So, it was a 2 week. That's what it was. I almost guaranteed 2 week. There you go. All right, the 2 week got it on this one. So the bottom of that move, the top of that impulse, the first red weekly is we anchor the bottom, and that gives you your top. All right, this one required a 2 week for us to get that big impulse, the initial impulse, this consolidation, and the re-breakout. Okay. So that's what gave us the fib extension levels to work with, and then go all the way down to the 4 hour. All right. Now, I exited Matic too early. If y'all remember, I don't know if y'all were watching my live streams or anything. We exited Matic too early over here, I believe. Yep, right here. We exited too early over here. And this is where I went and did the work to find this other fib extension level. Because we'd exited too early. But the good thing is we exited as we lost some kind of parabolic line here. But Matic fortunately gave us a beautiful consolidation pattern. We were able to re-enter over here. But then the second one, I went, okay, this is where I figured out I needed a 2 week or a little bit longer time frame to capture this impulse here. So I went and found the 2 week or the monthly. I'm not 100% sure. It looks like it was a 2 week that I used to find this impulse from this bottom price action, the constant green 2 weeks, the first red 2 week. That gave me my anchor points. And then we were able to nail this. Right, once we kind of readjusted based on that longer time frame, because I was using daily fibs at this point, and it was messing me all up. All right, and then we were able to say, okay, now Matic is going crazy uber parabolic over here. we broke out of, you know, kind of this uptrend at the time. We were drawing this as an uptrend channel. Or I think I was. Yeah, I was drawing this as a channel. Broke to the upside of this channel. All right, now we're on the upside of this channel. I'm going to draw a really parabolic line. And the Matic I still messed up a lot of Matic. This is where I started dialing into my strategies, when I figured out when I messed up on Matic a little bit. So I think I might have exited some right here. I don't recall selling any at 260, so I must not have got this. And then I ended up selling at like $2 over here. Break down this, come back into it. I ended up selling my Matic at $2. Ended up being 100x from the 2-cent entry over here, what little bit I had left. And it wasn't a huge entry, so don't think that I like 100x'd on like a massive position. It was like a 1% position over here. And then I sold 50% of it or something on this consolidation. I had to buy back. But it ended up being a 100x move. But this is the instrument that got me. All right, I gotta figure this out a little bit closer. And that's what helped us. See, that was a May exit, 20th of May, and then Ethereum peak. Let's go to Ethereum here. Ethereum's peak was actually right before that. So I've got my timing mixed up. Maybe it was because I'd exited too early, that helped me redefine the strategy to exit Ethereum. And when did Cardano peak? And the reason I'm doing this revisionist history, and the reason I'm going and trying to remember exactly the dates on this was mid-May. So it was because I exited too early on Matic. I adjusted my strategy. I was able to get the tops, or close to the top. I exited Cardano at 230. So somehow I got like the really tippy top of this, 230 over here. And I got Ethereum at 4K. And then we went back and we were on a small position on Matic as it broke back out to the upside on this. And then I got this one a little bit better. So this was that early May, too early exit. When it started to break back up, we had to buy back in. We redialed on that strategy. That's where I went from dailies to weekly levels on the fib extensions. So back to Bitcoin. Same exact thing's going to take place here. Let me find a fresh Bitcoin chart. I have a bunch of things to share too on Twitter. So this is my exit strategy. I just need to find a clean chart. All right, thank you. So 2 week, I want just a 1 week for now. Bitcoin will probably give us some really good signals in the 1 week. All right, so the 1 week, we had a red week, right? So this is beautiful. We've got a lot to work with now. I did tweet about this, right? So this gives me my kind of my baseline to work with. Let me go ahead and zoom up on this so I can get these anchor points right. Let's get these anchors right, and then we'll go from there. All right, so I'm going to anchor. What feed is this? FTX? Okay. So I'm going to start at the beginning. You can start down here at this bottom red as well, but I think technically speaking, you're supposed to start at the bottom of the green, right? And then the top of the first red wick, and then the bottom of that red wick, and then maybe to the bottom of this other area over here you can go to. The following bottom after the red wick, and that gives you your weekly impulse. So the weekly impulse started here with this green week. This red week closed here. We opened here, wick down, and then it was a strong move from that point up, right? So that was early October or late September. All right, so those are my anchor points. The bottom of this green candle, the top of the red candle we finally got, and then the bottom of the move after the red candle, and then now that we're in the recovery. So this currently gives us some serious price targets up here. Now, if we don't make another red, what will be the dot top? Yeah, we'll talk about that. All right, so if we make another red weekly, we'll readjust, right? So if we blast off here and get a red weekly in, late November, then we'll redo this work. But as of right now, these are our resistance levels. Let's go to the lower ones we're watching on a shorter time frame. Currently, 63K is a light resistance level. We should get to that pretty fast because it's already been broached over here, right? The standard one move deviation is 83K. Now, I know I was going to show you this. Miles, I don't have the right chart. Miles just posted that he expects the next impulse to go to 84K. I got to go find his tweet here. Hold on. I want to find the right tweet. He's expecting 84K. Here you go. Wave 2 prediction 84K. What's interesting is this is, work that's done on his long-term prediction model here. And so he thinks the peak of wave 2 is something like 84K. Where did he find his conclusions? Yeah. A potential wave 2 peak of 84K, then a 20% pullback to the red line. Okay, that's what he's looking at. What's interesting is that Miles' work lines up really close with our standard 1 deviation on this last weekly fib extension. So it's 83.7. So we're going to watch, and as soon as we curl over, we hit one of these fib extension levels and resistance and start to curl over, that's where we'll start to trim, right? Or exit our leverage or whatever it is that you're doing, right? However you're trading that. Okay, if I adjusted that wick a little bit closer, I got 84K almost exactly. So good job, Miles. Now again, my strategy is more dynamic, real time, based on real price action and not on prior price action. I just trust this more. But interestingly enough, our critical levels, the standard 1 deviation move, is right at 84K. So that's the impulse I'm looking to play. This is why I'm currently in leverage, ultimately, is because the technicals are setting up for another big move. So we had this breakout, retest, and now we're resuming. And so my leverage has been built right around 60K. And I said I sold 20% yesterday in slight profit when we closed below the 20-day SMA. And I need to get back in this on this. You can see it here. It's not meant to be that, but there you go. There's the upside of our bull flag. Get a confirmation on that, and we'll re-enter. All right, but those are the levels I'm looking at currently for the next impulse. Now, interestingly enough, because we got that nice red weekly, if Bitcoin were to blast off right now, and there are people predicting like a late November, early December peak, right? And if they were to be correct, which I would put the odds pretty low, but it's a possibility. If they were to be correct, we have this fib extension levels to work off of. So if we blast straight off into late November, early December, and actually peak in like December 14th, we very well might not get another red weekly, and we simply just make a big parabolic move all the way to 170K. So that gives us levels to watch. So if we continue to move past 84K, right? So we'll watch 84K. I'll only sell, just another small note about how I do this. Just because this resistance is on here, I'm not going to sell just coming into it just because it could go all the way to the top. It could go all the way to 170,000 on the next impulse, and I want to ride the impulse all the way. I want to push the trade all the way. What I'm going to do is I'm going to, when we get this breakout of this prior all-time high right here, whatever structure we got as we came into resistance at it, right, and then resumed off, we're going to take that information and build ourselves a parabolic trend line. If when we hit 84,000, we see that it looks like it's curling over and we get below this, so I'll pay my insurance to try to get the top and make sure that I'm not missing out on a move to 100K, right? Maybe if this decides to keep on going. We get below it, break down. This is my signal right here, right around 80K, to go ahead and exit those leverage positions. Now, obviously, I'm not going to exit spot at this stage, but we're looking at a next impulse and then a retest back down here possibly. So that will be my trigger to go ahead and exit my leverage position and then reload on the dip, okay? But I won't do it just coming into that level because I want confirmation that this is the level that we're going to find resistance at. There's nothing that says that we could be wrong and we go ahead and hit 100K. And then we roll over, right? Who knows? We don't know. But that's how I play it. So I hope that's helpful, and let's go to comments. Oh, dot. I can do some work on dot here for you too. Let me find a fresh dot chart because I got mine all marked up. Thoughts on this strategy: buy 5 small cap meme dog coins, 10% of portfolio. Wait for alt season profit. Victor, in my opinion, you're much safer going with like a proven commodity like Outrun or Cardano. Cardano's probably, I would rather people buy things like my opinion, not financial advice. I would rather, instead of meme coins, I would rather people allocate into like Cardano and Link and things like that are let me show you Cardano and Link and I'll tell you why, and maybe Steller. If you look at their charts versus Bitcoin, they're all sitting on support of some type, right? They're all like Steller is looking stellar. So I'm probably going to put a position. The next trade you'll hear me talking endlessly about after Litecoin is going to be Steller, probably. Because it's a big name and it's going to pop. But it's a little bit behind. I expect it to pop with the other kind of smart contract and chains. But it's a big name from past cycles and it's a good project. So things like Steller, which is sitting right on resistance right now versus Bitcoin. Things like Chainlink, which is obviously it's still in this like uptrend. It likes to make these huge monster moves when it breaks out. It's sitting on support. And things like Cardano versus Bitcoin, which is obviously coming back after a big parabolic move, is coming back into some support here. Those type of things I feel more comfortable telling people to buy, because the problem with meme coins is we don't know what celebrity is going to talk about what meme coin and dog coin and which one's going to be the winner, right? You could buy Floki and Sheeb and Doge and they all just are just junk. I think they've had their time in the sun. Like Doge, I think, you know, Elon, and another potential pro for Litecoin is I think Elon's starting to figure out the crypto space a little bit more, and he realizes, okay, Doge is merge mine with Litecoin now. If he is really going to seriously support something, maybe even allow Tesla to take payments for it, he can't really do Doge probably just because just the people he has to account to, the shareholders probably aren't going to go for that, right? Like, dude, you're not allowing your little favorite. You can pump it on Twitter or whatever. You're not allowing us to take payments for Teslas in your little favorite pet project. But I could see him saying like, okay, we're going to accept payments in Litecoin and Bitcoin because Doge is merged mine with Litecoin. So in theory, Elon like has probably some affinity for Litecoin because that's what Doge is merged mined with. It's using the same mining network. So anyway, back to that point. We don't know if Elon quits pumping Doge and the Sheebs and the Flokis all kind of go out of style because the dog coins have had their day and they're out of style. Let's look at Sheeb. Like, I don't even know what it's doing. I did do a trade on it. I'm out of the trade. Yeah, so Sheeb, I took this entry over here. It's a very small position, but I just took a little trade on it. Like, all right, fine. You people, I'm going to take this breakout retest resumption over here, and I exited on this, you know, we lost this over here, right there. Or somewhere like that. I think I actually sold right here. Yeah, bounce down, breakdown, retest. So it's gone sideways since I sold. You know, this is probably going to fall off. Let's look at what Doge did, right? Let's get back to Doge. We just don't know that they're gonna there's no real world use case for these coins. I know people they have name value, so I won't disparage them too much on that. Doge especially has name value. It's going to probably survive on in some form because of just the name recognition value of it now. It had enough, you know, its 15 minutes of fame was enough to kind of keep it around as far as name value. But it very well might have had its 15 minutes of fame, and that's it. That's all it's ever really going to have. So, I don't know. I can endorse the Stellars, the Chainlinks, and the Cardanos, which are good cryptocurrency projects that have real use cases, that have real development activity. They're really going to do something, and they're all coming into support. They're all beaten down by the dip, right? And I'm not a fan of chasing momentum. I'm a fan of buying the dip ahead of fresh, you know, post-hype dips or pre-hype dips, or, you know, pre-hype before the hype starts, right? That's my thoughts on that. Craig, if Bitcoin gets to, I don't know, a couple $100,000, yes, I'll get a twin turbo prop. Absolutely. Sorry, 1 second. All right, sorry about that. Yeah, if Bitcoin does really, really, really good, if crypto in general does what we all hope it can do, then yeah. This is what I would be hoping for. Yeah, this will be my, like, people buy Lambos and stuff. Like, this is my Lambo. The King Air 200. All right, back to the live stream. It seems like the entire market understands stock to flow, expect to blow off top. Since current prices are likely near bear market low, who would buy Bitcoin right now? Where's the demand going to come from? Joe, this is a fascinating question. Thank you for asking it. This is exactly what I've been concerned about. I'm like, if we all expect this is the bear market low, what impetus is there for a blow off top? Maybe we, you know, this time could be different. Here's the thing. is markets trade with momentum. And currently we do have momentum. So if you look at the current technical setup from a pure technical perspective, right? I'm just going to draw it, just make it as simple as possible. We had all this resistance over here built up from this price action over here. And we flipped all that to support. We have momentum now. Now look at my big moving averages. So at the end of the day, we've got momentum. So momentum is going to drive demand regardless, right? It did create Bitcoin's a new all-time high. Bitcoin's above 60,000. And you saw crypto.com and Coinbase were the top, apps for some period of time on like Google and Apple. I don't know. It has momentum. There is a lot of demand in the market from people taking. So I would say the biggest demand driver right now is the reality that inflation is not transitory, right? And so people are looking for what's a reasonable hedge against inflation. And if the market decides that Bitcoin is a store of value that is also a hedge against inflation, then we might actually get some serious, buyers coming in here just as a little bit of a hedge instead of gold, right? Moving maybe 1% of their position from gold, a bit, whatever it is, right? There's lots of other drivers for buying into Bitcoin potentially, but the thing is we have momentum back on our side. You look at the moving averages are all moving up. We've retaken the 20 here was the first sign that we were losing momentum when we closed below it. Now we closed below it over here, but this is where I started building my leverage, right? It was after this, on this big sell-off over here into this support, we started building. And then we retook the 120. So we had one daily close below it, and then we got back above it. So really what I wait for is 2 daily closes below it. And actually yesterday I thought we'd already had, I'll show you this. On the topic of momentum, I use my moving averages. I was looking at this right here. I was looking at TradeStation apparently, had a daily close below and a second daily close below. This is what caused me to trim 20% of my position yesterday. I was like, okay, there are some exchanges that saw the daily close for whatever reason as below the 20. So we've had two closes below the 20 on some exchanges. So I'm going to take some defensive action. When you look at, so for me, these moving averages tell me everything I need to know about momentum, right? And then people use RSIs and other CCI and everything else, but I just use my moving averages. If we close back above the 20 here, we're strongly trending upward, and that momentum will continue to carry us for some time, most likely. That's just the way markets work. Now, speculating on where the buying comes from, eventually some big player besides, so we've had MicroStrategies, and then we had Square and Tesla, I forget which one was actually first, add Bitcoin to the balance sheet, and now Twitter. So really, honestly, if I would say the big move here, Twitter, somewhere over here is when Twitter announced that they were allowing, Bitcoin payments. So we've got Twitter now involved, but Twitter and Square are basically the same thing. So you've got, Square, Twitter, Tesla, and MicroStrategies all in the Bitcoin. You had big names. The next time somebody big, especially if a tech giant, were to announce like a Microsoft or Apple or Google or Facebook or Amazon were to announce that they were either putting Bitcoin on the balance sheet or doing something with Bitcoin, that's going to cause a huge rally. So that speculating on what the news might be, also a spot ETF approval. So this is all driven on a futures ETF approval, right? Too. So this over here was driven on the B word event and Elon not being totally bearish on Bitcoin. And then somewhere in here was Twitter, right? Which was kind of muted by the market because, Square was already involved. So Twitter being involved in Bitcoin really, was like, okay, that's kind of that was a known thing. It was probably going to happen. Okay. Or something related to that was going to happen. But then you had this big move was really driven by a futures ETF. This was all the hype around it and then the big move, futures ETF. A spot ETF approval, which would be better for Bitcoin than a futures ETF, could also cause a lot of buying. So there's lots of potential catalysts. Let's just look at something here. And so, one thing to note, again, coins keep coming off of exchange. If I go to the 1 week here, you see a lot of coins came off of exchange again yesterday. So somebody is buying actively and pulling coins off of exchange. Now, this very well might be just, again, good education around self-custody that's causing people to get their coins off the exchange. People are figuring out not your key, not your coin. But Let's take a quick look at the derivatives. Yeah, the futures funding rate is starting to tick back up a little bit. This right here, just by the way, this is what tells me, this is why I got defensive when we closed below the 20. As this ticks back up, this tells me that we're probably in line for one more quick wick down before we really make a meaningful breakout. There's too much leverage that needs to be flushed one more time, and then maybe a bigger breakout. But nothing says that we couldn't have a bigger breakout and then that big flush. 84K just let a ton of leverage get built up in the system and then just destroy it all on a big move back down to 65K or something. But yeah, I hope that answered your question. I mean, technically we have momentum, so that's going to probably carry us. We just broke to the upside of this bull flag. That's probably going to carry us to higher prices, and then that when you're in price discovery, the hype around the asset that generates is going to create more buying. We're getting to a very low liquidity. A reason I brought this up over here on the exchanges side is we're getting our illiquid supply that Will Clemente, that if you guys follow him on Twitter, kind of coined that saying. But you see this massive drawdown. There's not a lot of liquid supply on the exchanges. This is why we see those crazy scam wicks you saw the other day, right? It's because there's just not a lot of supply available. It's getting to be more illiquid as time goes on because there's just less supply available at the ready for somebody to log on to an exchange and put their coins up for sale, right? They have to actually transfer them to the exchange, which is just an extra step. It's really not, it's a small difference, but generally speaking, when people pull coins off of exchange, that is a sign of buyer confidence. That is a sign of what's what I'm looking for, conviction. So they're probably not going to be as apt to just sell as somebody who just got their coins on exchange is nervously watching price that might sell at a moment's notice. And then obviously leverage is the other thing. But yeah, if this is the bear market low, I think momentum is going to take us higher before it comes back down. That's the main. All that said, that's my opinion. I had to pull over my van to write this message. All right. No problem, Michelle. Do you think we should start to see these meme coins during the bear market? Short? I will be. Yeah. I will be shorting anything that in alt season 2 breaks out big, a Floki or a Shib or a Doge or whoever else. And if it's still really hot when I'm with conviction exiting my altcoin positions at the height of altcoin 2, then yes, I myself will, if it's a asset that I can get, access to a futures short on or the ability to short it, I will look at, especially Doge and the bigger market cap ones, I will look at, yes, putting shorts on for sure. Anything that I think has, I'm going to lightly be shorting Bitcoin, but I'll be probably a little bit more aggressive with shorting things like, the meme coins and such when the bear market really starts to roll over. So interesting to reflect back on the B-Word conference when we thought BTC was going to 20. Things changed so fast. Well, Victor, yeah, a lot of people thought it was going to 20K. I don't think I ever thought it was going to 20K. Now, I did say it could go downward. I was looking at this area right here. This is what I kept looking at this area. I thought this is where we were going. I'm kind of a contrarian. I always look for the market to do something unexpected. So if we would have broken down below this price action, so what was holding us up, obviously, was this over here. Right? So the monthly open, I think it was, yeah, the monthly open price and this kind of these wick lows, this price action over here was what was giving us support. And so my thought process was if we break down here, we are either going, I was looking at this little bit of support right here too. We are either going to have a shallow sell-off to like the 26 range. This is, I think, more where I was more focused on was 26. But as far down as, 21K, the contrarian in me thought we would probably never get below 21K because too many people were looking for a retest of the 19.9 all-time high, basically 20K. So, how things change, you're right. But if this was going to break down, this was the area I was actually looking at. Because I thought, it's probably not going back to 20. It's going to fake people out. But things did change quickly. Gus over here called on the bottom, his short time frame work. Gus called like the bottom tick over here at like 29.2 or something. But, you know, at the time, too, we were all watching this descending wedge pattern. So to me, that was coming into support. It was about to come into support. I rooted it on the daily. So it is, I took the daily. Yeah, so at the time, I had a downtrend that looked like this. Yep, so we had a little bit more to go. So we could have broken down further, you know, a couple more days out, like late July. That's also what I was looking at the time. I was looking at late July for a ping of this 26, 27K level, possibly, as the actual spring bottom. But we had this, I was rooting my down descending wedge on the daily, and we got that beautiful entry right there. And then we ended up ultimately being able to adjust our daily to this. Okay, we ultimately closed here, so that was, you know, that's where we adjusted the descending wedge to. All right. What about catching a breakout on repair, the dead cat bounce for BTC in case we don't hit the top? What about catching the breakout repair? Oh, yeah. You know, I'll probably be actively playing all that when the time comes. Right now, my focus is on, okay, we had this first rolling top, and then we had this Wyckoff. This is a Wyckoff top, a Wyckoff bottom. So my focus right now is, okay, the market's manipulated. I just want to make sure that I'm properly protected in the event we get unexpected price action, because again, I have to understand the market is manipulated, and I've got to protect myself. But my focus is much more on how do I exit this. If we get another rolling top, this is a lot harder to exit, you know, given that whole fib extension level type of top, because you're going to probably get a couple of exit signals before it actually happens, like, right? So if I was looking to exit using that same exact strategy we talked about, you're going to get false signals. So my other focus is how do I avoid getting, you know, exiting right here on a false signal? And so the answer for me is probably going to be a combination of actively working with leverage, you know, trading my leverage. So when we get that breakdown, at the same time you have this breakdown, you have these downtrends that you have if you break back above and get resumption back above. So you may have to sell a little bit here and then buy back a little bit on resumption out type of thing. But at the end of the day, the other thing that helps me out is my moving averages. So what I do know about even a rolling top is when we get really disconnected from the 120 is where price action starts to slow down. So, but all that to say, my focus right now again is on, if I look at this rolling top, if we get another rolling top, it's going to make exiting the top a lot harder, because we were all uber bullish here, and we were in the buying mode, right? So I was trimming profits on these big moves, like these big breakouts. You know, I'd trim a little bit as we came down, and then buy back. You know, but I was looking to the bullish side, which is a lot easier to play, because I would sell a little bit here, buy a little bit there, sell a little bit up here, buy a little bit there, right? That was a lot easier to do when everything was trending upward and I thought we were still going upward. It's a lot harder to catch the top of these type of moves, you know, as it rolls over, especially if we're looking at, this is going to look like a parabolic top. For example, how many people would have sold now that so if we do the exact same thing coming into the end of this year, right? So say this is 2022 instead, and we're going to do a rolling top next year. How many people are going to exit at the equivalent of, say, $30-something thousand just to watch it break back upward right after, right? So my focus right now is managing this whole process and figuring out, because this looks like a parabolic breakout and then a retest and then just resumes out of there, right? But there's going to be a lot of people that if we do the exact same thing coming to the end of the year, they're going to sell maybe way early. Maybe, you know, like, so take all these numbers and multiply them by 10. Say we actually do something crazy and we hit like 200-something thousand. And over here, and it's looking like we're starting to roll over. People are going to call at the top, and people are going to exit here. This would have been December. This was last year, December 17th through 23rd. You're going to have a lot of people exiting right there, and then just see it rip up in their face. So the other part of it is, to answer your question, to be fully convicted, I'm probably going to save my spot for like these lower moving averages. But yeah, to answer, so on the breakout of the dead cat bounce, I will probably be playing the dead cat bounce, because the problem is I'm not certain if it's a dead cat bounce or if it's a resumption and it's like another rolling top. So inevitably, we're probably going to continue to play the dead cat bounces somehow. You see this downtrend right here, break to the upside, retest, and resume up. If I did trim some over here, I'll probably put some back on over here, right? And then that's probably what I'm going to end up doing. And I don't know if it's a dead cat bounce and we roll over right here, or if it keeps going like this, right? So to answer the question about the dead cat bounce, yeah, I'll probably be playing them because I don't know if it's a dead cat bounce or if it's a continuation of a rolling top, right? Here's probably ultimately the reason I'm kind of, you know, I don't know. I think I have a much better chance of getting close to the top this time than I think a lot of people who are using prior fractals, because if we get manipulation and we get a rolling top like this, here's what I'm going to be doing. I'm watching, instead of the 120, which was my, in a what I'm certain is a bull market, my exit signal is the 120-day SMA, because that's a big deal if you lose that much momentum, and that ended up being a really good protection and allowed us to buy back over here. But this time, I am now certain that we're coming to the conclusion of a bull market. If we break up here and we're in a couple $100,000, I'm going to be watching the 50-day. So here's the other secret I'm going to have on my side, is I might exit leverage, right, on these big parabolic moves. But if we hit the 50-day and then bounce off of it and we get resumption, I'll be back in leverage, right? And just, I'll have to eat a stop, whatever, 2%, whatever. I'll have made a bunch of profit by then. But I'm going to watch this 50-day like a hawk. And as soon as we roll over, break down, confirm resistance, and break down at the 50, that's where I'm out of spot. Because that's the point I know we're losing momentum. So I'm already kind of watching like the 20. You see the 20-day? The 20-day is going to be an indicator to start to trim leverage, right? If we lose the 20-day, trim leverage, trim leverage, trim leverage. But I'm ultimately going to be using these trend lines a lot more than I am the 20 days. This 20 days is just another momentum indicator for me that I'm going to be using. When we get very parabolic, that's why I have, if you look at my chart right now, it's 20, the 50, and the 120. I'm not even looking at the 200 anymore, because we should never get back below. If we're below the 200, like I'll be out long before the 200, right? Because I'm going to be out below the 50. If we get resumption down below the 50, at this stage, because we're not in 100,000 plus, I'll only be just not taking leverage trades, right? So at this point in time, if we were to break down here, I'm obviously going to get stopped out of my leverage somewhere right around break even or slight profit. I'm going to move my stop loss as soon as we get off here, part of break even for sure, since we broke back above. But so I'll be out of leverage at break even. This is, if we lose the 50 right now, this will just be my signal. No entries on leverage trades until we get back above it. But if we lose the 120 is where I'll exit spot. Like, all right, something's different about the cycle. I'll see you guys later. But if we break up, which I expect, right? If we break up here and we go ahead and head up to, 90, 100 plus, I would say at $100 plus $1,000 is where I'll firmly move to the I'm out spot if we lose the 50. Lose the 50, like over here is where we lost the 50. Lose the 50, roll over, confirm it as resistance. This is a close barely below the 50. A second close below the 50, that's where I start to get concerned. A retest of it and a roll down, that's where I'll exit. At the bottom of that close right there. The retest, and then we roll over below that retest, that's where I'll exit spot. For my first time ever, I'll have exited my core hodl spot position on a loss of the 50-day. So, kind of more tips about exiting the top. But this is the 50-day, I think, is what's going to give me a heads up. I think a lot of people are going to think like this is a parabolic top and they're going to exit over here. Because if this happened like late December, right? If this exact same thing happened late December, a lot of people are going to be exiting. I'm going to be watching this 50-day like a hawk. And if we don't get below the 50-day, we stay above it and we resume up, I'm still in the trade. So that's the other kind of thing. Again, my strategy is very dynamic. It's based on what's happening in real time, and I use the past as a history lesson to help me dial in my real-time dynamic strategy. But I don't use the past to make trades. And I people got mad at me in the spring when I was trying to explain that. Like, guys, I don't use like the 4-year model and everything else. I don't use it for trades. I do use it to, educate myself as to what's going on, to frame my mindset, whether I'm bullish or biased, all that type of stuff. But I don't use it for trades. I use real-time price action for trades. So anyway, those are all my thoughts. I hope that was beneficial. That's just silly in my opinion, but let's just agree to disagree. Thanks for humoring me, my friend. Okay, but we trade 24/7. Is there really a difference between 12 p.m., 1 a.m., and 11 p.m.? Are you guys like discussing this in chat maybe? Because I missed something. Brandon, do you think the daily closes really matter since crypto trades 24/7? They can be set to fit arbitrary to me. They don't matter as much as like obviously in the equities markets. No, but it's just where it gives me a frame of reference, right? It's not so much that I think the market's gonna definitely do anything with that. It just gives me a frame of reference. And what the thing with crypto is we get these insane wicks because it's fairly low liquidity. So the daily closing price, as we're coming into that it happens every day at 7 p.m. You can watch. It's an increase of volume right as we come in. So that increase of volume gives me whatever the price is at that 7 p.m. tick because there's an increase in volume coming into that, my time, Central Time, US, 7 p.m. When it comes into that final tick for the daily, there is an increase in volume. And that increase in volume gives me a higher confidence that price is more reflective of what the market thinks at that particular time than a potential wick. Because these wicks, like if you look at these wicks, the reason I discount these wicks and I do this bottom trend line on the daily closing price and on the wicks is, these wicks were mostly lasted minutes or seconds, and they were just people getting wiped out of leverage, right? And this was just a cascade. But they didn't really necessarily reflect the true price that people were thinking was fair at that particular point in time. The daily levels are much, much better indicator to me. So that's sometimes why I do that with the daily levels. Now, the other thing too is you can't deny, I don't care who you are, if you go use the daily levels, like the Heath levels, they get hit and price almost very, very, very frequently. It may not ultimately respect that level, but it will bounce off of that level. You'll see price do interesting things around these levels. Like for example, this right here. You see that wick came right into that. Whatever these daily closing prices are, people do pay attention to them, and it's probably more of a self-fulfilling prophecy. It's just that a lot of people are using the same charts, and a lot of people have the same daily closing time, and the market does pick up volume at that close, and so that does tell me when the market picks up volume, that increased volume gives me higher confidence that's reflective of the true thought of the market about price. And the market does react to those prices. The market does very often, when you have these daily close prices, you'll see the market. So there's the daily close price from over here. Here's the price action from the day. It slowed down right at it. The hourly here, this is an hourly. Like the hourly closed right at it. The hourly opened, came back below it, seesawed around it, opened below it, came up to it, opened at it, came up to it, wick down to it. So, they definitely carry weight. You can see price will just interact with them. Exactly why that is, it's just a self-fulfilling prophecy, probably more than anything. But again, that same time every day, there's an increase in volume. So this is market participants jostling to get that close where they want it to be. Bulls want it to close above resistance, and bears want it to close below resistance. And so right at that 7 p.m. tick, there's that increase in volume, and whoever ends up winning that fight for that day, it's a good indicator of what's going to happen, if there's going to be continuation or not. So that's another way of looking at it, is that at 7 p.m. my time every day at the daily close, there's a little bit of a fight between the bulls and the bears to see if the bulls want to get it below resistance, and the bulls want to get it above resistance, and the bears want to get it below resistance. And if the bulls win and get it above resistance, likely there's probably going to be continuation to the upside. If the bears win and get it below resistance, likely there's going to be continuation to the downside. And the market continues to look at those levels too. So they do work, yes. All right. No problem. I don't see why it's silly with metals the same, trading gold and silver. Yeah. Yeah, and somebody else is commenting, same thing, right? So the close is the same time every day for a lot of people, so it's there's enough market participants. All right, but yeah, it has weight. It works. Oh, it just works. I'm sorry, but that's the other thing too. It just works. So I don't care what anybody else thinks. As long as it works, I'm gonna keep using it. All right, cool. Metals trade 24/7 like Bitcoin. Yeah, it's 7 p.m. my time, Central Time, is when these candles do their daily close every day, same time, right? And then obviously the same is the open of the next candle is the exact same. It's like it's an instantaneous flip between one candle to the next. So that's why they're all lined up, right? The close and the open are going to be lined up. On any good, you get these weird, like low liquidity charts with bad data feeds, and you don't get the lineup. But this is why I use Coinbase. Truth is, Coinbase has the best data feed, and they have, I guess, the most volume, but they have the best data feed by far. So I use Coinbase's chart. I don't trade like my active trading is either on Gemini or KuCoin. I don't actively trade on Coinbase Pro, but I use their feed because it's more accurate. What about Litecoin? What about it? It's printing a resumption signal here on this little bit of a breakout. So we had a double breakout on Litecoin, right? So it held support over here, this 146 support we were watching, and then it broke to the upside of this. This is where I tell you the best trading signals I give are the ones that I send a text to my brother when I'm looking at something going, oh, this is a really good setup. I text my brother, hey, if you've got some, I knew he had some fiat lying around. That he had saved up some fiat. So what he does is he puts his fiat into Gemini and lets it collect interest with Gemini stablecoin Gemini Earn, and just sitting there collecting interest. And if there's an asset that's on Gemini that looks really good, I'll send him a message, hey, this is looking really good. You might want to, So he had some money, so I said Litecoin's looking really good. Right over here, as we broke out, retest, came into the 180 retest and resumed. I think it was over here. I said, hey, Litecoin's looking really good. If you want to put your money to work, And my point is, like, as soon as Litecoin starts to top, I'll send them another message, hey, rotate that Litecoin into Bitcoin. Or sell Litecoin. It depends on what's going on, right? If both of them are really topping and I think that Litecoin's going to roll over with Bitcoin, I'll just send them a message, hey, sell your Litecoin. And then I'll tell them, okay. But like that was the last day I told him to buy Litecoin right over here, which it obviously kind of has gone sideways on us, but I still think it's going to break out. It's wanting to break out. The other thing I told him was buy Bitcoin at 40K. I said, all right, he had some money available over here. So we both bought. I had him buy back into Bitcoin right here, same time I did. He sold with me here. He bought here. The very next buy, he's saving up some money. He's been saving up his money. His DCA was right here, 40K. So he put in an order at 40K as we came into the 120-day SMA. And sure enough, so he sold. He bought here. This is literally my brother's trading. So if you guys want the best trader I know, my brother bought Bitcoin literally right here. I told him put it in an order at like 9,700 or something. He bought Bitcoin there. He sold Bitcoin at 50K. He bought Bitcoin at 32K, and then he DCA'd in at 40K, and he just bought Litecoin. Oh, he also bought Ethereum. Yeah. So when we very first started all this journey together, I said, okay, buy Ethereum. Way the heck over here. Yeah. We bought Ethereum last summer at like 240. He bought it 240. I know that. Wherever it was. 240 right here. Yeah. I was just starting to break out right there. He bought. I think I told him if he got it at 240. I'm not 100% certain, but I told him buy Ethereum at 240. Told him sell Ethereum at 4K. And then so he used that profit to buy Bitcoin at 32K, along with the Bitcoin he sold. So yeah, he's been killing it. So anyway, I say all that when you asked about Litecoin. The reason I say all that is I only give my brother the bet. Like when I'm sitting there looking at the markets all the time, crypto markets, and when I see something that I think is just dead stupid obvious, that's when I tell him to do something. And it to this point, those have all been absolutely golden opportunities. And so what I'm looking at on this Litecoin chart, this is really ultimately what I'm looking at. It's just a high risk reward. It may not work out. That's the thing. Trading is all about probabilities. I meant to bring that up today. This is all probabilities. Everything I do is just I'm calculating the probability of something happening, and I'm placing I'm moving capital around based on the odds that I think that those probabilities are going to play out. So the odds that we get a huge monster breakout on Litecoin are very low. The odds that we get a nice breakout, at least this trend line or something on Litecoin, are very high, because we're holding this resistance of this support level. We're right on this support level. And the risk is very low. If we break down over here and I see us starting to really lose this right again and we're starting to roll over, we're going to be pretty much at parity with Bitcoin. So I won't have lost, and my gauge is, am I losing ground versus Bitcoin? So having bought just below and just back above this area of support here, if we fall back down below, I mean, I'll have lost a small amount of parity with Bitcoin, but I really won't have lost that much funds, and it's well worth the risk reward. But if we get a big move to the upside, guess what? I just stacked a lot more sats, which is beautiful, which is what I'm trying to do. So that's what I'm looking at. That's why I'm seeing this lining up here for Litecoin, and you can see it too on the narrative side. Hold on one second. When it comes to narratives, you know, if Bitcoin breaks out again, Litecoin trades with Bitcoin, and it's a common thing when people who have been on the sidelines with crypto, that have kind of passively watched crypto, and they hear their friends and family talking about crypto, but if they're the sensible type, it's like, I'm not going to buy a stupid dog coin. I don't like the Doge, like Dogecoin's way back down. I'm not buying it, whatever. When they ask their friends, okay, Bitcoin's, I want to get something. Bitcoin's 60, whatever, $80,000. I don't want to buy a Bitcoin or even a part of a Bitcoin. It's just, I don't want to buy it because of the bias that we have around numbers. What's like Bitcoin, but cheaper? And there's two things people are going to say. They're going to say Ethereum, which is, I disagree, is nothing like Bitcoin in my opinion. But they're going to look at Ethereum and go, okay, Ethereum is 4,500. Congrats, Ethereum bulls. Ethereum's breaking out over here. Ethereum is $4,500. Okay, what's the other thing? Is there anything else that's like Bitcoin? Yeah, there's this thing called Litecoin. It's basically Bitcoin Lite. It's like silver to Bitcoin's gold, blah, blah, blah. Oh, it's $200. Yeah, I'm buying that. And, you know, or even if it's $300 or $400, then people won't care. If, like, they see Bitcoin $60,000 or $80,000, they see Ethereum $5,000 or $6,000, and they see Litecoin at $260. Like, okay, yeah, I'm going to buy the Litecoin thing. That's good. That'll work for me. And then it's coming. That's why I'm pretty convicted. And it'll be short-lived, too, because all these newcomers who are joining late are then going to start to learn, okay, so I bought this thing called Litecoin. So what does Litecoin do? They're going to start to study Litecoin. What is Litecoin? Okay, it's proof of work, blah, blah, blah. Okay, and they're starting to figure stuff out. They're going to start to slowly study. And then they're going to start to become more educated as Litecoin makes its big move. Like, oh, I bought Litecoin at $300. This is doing good. It's $400 now. It's $500, $600. Oh man, Litecoin's doubled. It's at $600. You know what? I'm going to sell some Litecoin. I've been reading about this space. I think this Cardano thing is really interesting. Or I think this, whatever, right? And they're going to start to become more informed, more educated, and then they'll take the profits and move it elsewhere. But all these new entrants are going to be coming in looking for something to buy this fall and all the hype. Like, Litecoin's going to come up as an option. It's available everywhere. Oh, I'm using, I don't know, whatever, PayPal to buy my, I don't know why people would do that, but people, I guess, you can buy crypto on PayPal, I guess, or something. Whatever they're using, Litecoin's everywhere. So they're all going to look at it and go, all right, I have three options. The app that I'm, whatever app that I'm using allows me to buy Bitcoin, Ethereum, Litecoin, and Bitcoin Cash. All right, I guess I'll buy the Litecoin. It's the cheapest. So you're going to have a lot of that stuff. So, yeah. No, for my brother, it's not financial advice. When I say buy Litecoin, I'm not telling him to buy Litecoin. I'm saying look at buying Litecoin. And then there's Shiba. Yeah, right. All right, guys, I'm going to wrap up. My throat is killing me. Please check LTC BTC. That's what I was looking at, wasn't it? Right here. Consolidating, compressed, very compressed, ready to break out. So you've got the compression on the chart sitting on support. You've got the psychology. Bitcoin is likely going to break out and make a new all-time high, create a lot of buzz. And so you've got both the technicals and the fundamentals lining up. Those are my favorite type of trades. And this is what generates a brother sending signal. If I send my brother a signal, it's probably because it's really, really, really well thought out. I haven't even had my brother buy Outrun, although that would be a good one for him to buy if he's, I don't know, Tanner, you're not on here, are you? If he were to buy Outrun, but the problem is he's on Gemini, and Outrun's not on Gemini, so I don't even mess with stuff like that. I'm like, I'm not going to tell him to transfer his stuff to KuCoin to buy. Like, there's plenty of good stuff. He's in Bitcoin, Ethereum, and now Litecoin. He's got plenty of upside. He's got plenty going for him. He doesn't necessarily need to be moving all over the place like we are. I mean, this is like long term. I definitely think Outrun's got a lot more potential than Litecoin, but right now in the immediate future, I can definitely see Litecoin making a big move. All right, that's it. If BTC price breaks the 50-day MA, then why sell spot when you can short BTC? Are you concerned about tax? I mean, if Bitcoin were to break the 50-day to the downside right now, I'm not concerned about taxes. Why? So why sell spot when you can short? I'll do both. I mean, I'm just to be honest with you, I'm the type that's going to take advantage of the market, right? Remember, I'm a small scale Bitcoin miner. So if I have excess profits that I don't want to pay taxes on, I'm not adverse to spending a lot of capital and operating my business at a loss next year. My small crypto mining business at a big loss and offsetting a lot of those taxes, right? So you guys got to be creative. I know people are freaking out about taxes. I'm like, A, just pay your stupid taxes. And B, smart people with a lot of money, when they take profits on something, they immediately dump it into tax write-offs of all types, right? So this will be a tax write-off. Yeah, because I'm going to be operating. I'm trying to operate two Bitcoin mining facilities, one here and one in the Hill Country, and I need a way to get between the two of them quickly. Tax write-off. Right, so I have accountants that tell me if this is legit, right? And so do your own research on the tax thing. But there are 120 volt, lightweight Litecoin miners out there that only cost a few $100s. I mean, if you want to offset a little bit of your taxes, go buy a dozen $1,000 Litecoin miners and offset $12,000 of taxes and start mining Litecoin in your garage. And guess what? That's then you've converted that tax liability. It's no longer a tax liability because as long as you have a business, go set up an LLC. Not financial advice. This is not financial advice. But you might think about doing something like setting up an LLC and buying some equipment and writing off all that equipment and the space in your garage and all that electricity and everything else. You write all that off for your taxes and mine Litecoin, and that's a residual income that you'll have because Litecoin's not switching off of proof of work mining, I don't think. Mine Litecoin for the next few years, and then you basically have moved your tax burden from taking a lot of capital of profits on trades. You move that tax liability into future years because you'll have this income producing asset that'll produce asset residually over several years, and then in the coming bear market, maybe buy that equipment at the end of next year when the bear market's kind of underway and the equipment's cheaper. You can get a little bit more of it for your dollar. And then maybe at the next cycle top, then you sell some of that equipment at the top maybe and take a profit on that and then keep doing that over and over and over again. I don't know. Thoughts? All right, guys, I'm going to take off. Take care. Can I check DOT? I've checked DOT like 3 times a day. It's breaking out. Beautiful entry signal. It's rock. Pew, pew, go, go, go. There you go. There's DOT. Go. All right, guys, take care.